Again, thanks to TOOTRiS and Jeff and Lauren, who's really been the driver of bringing this program to you all. She is very passionate about the schools, and I'm a consulting CFO with PBO Advisory Group as well. And we've gotten hundreds of PPP loans for our clients, and now with this new Consolidated CARES Act, we have the opportunity to all of you potentially get some more money into your pocket, which we know is really, it's been really hard for businesses, particularly small businesses. And so this is a payroll tax credit, which can very practically allow you to recognize cash flow, positive cash flow right away. So what happened with the CARES Act is that originally the employee retention tax credit was not available to you if you got a PPP loan. It was really made for those larger companies, but now they've extended it to companies that are smaller and that had PPP loans. So what is it? What it means is that we can look at your qualified wages and see if you can get a payroll tax credit against those wages. And those wages, the applicable wages, are between March 12th of 2020 to July 1st of 2021. So what this allows us to do is we should also remember that the wages, qualified wages, also includes healthcare costs that you pay on behalf of your employees. So that's important because that's also extra dollars. And so what the stimulus bill did is it's allowing us now to look at 50% of your qualified wages in 2020 and 70% of your qualified wages in first quarter of 2021 and second quarter of 2021. So what does that mean exactly? So qualified wages, you have a max cap. So it's in 2020, it's $10,000 per employee is the max cap on 50% tax credit. Means you can potentially have a maximum payroll tax credit of $5,000 per employee. And then in Q1 and Q2, again, it's a $10,000 of qualified wages per employee, but it's 70% of those wages. So it could very potentially be a $7,000 tax credit for both Q1 and Q2, which is $14,000 of tax credit per employee. What are we going to do here? What we're going to do first is make sure that you're eligible. So there are several things that require eligibility. One that's really easy to prove is that we compare your 2020 quarterly revenue against your 2019 quarterly revenue. And if you had a 50% reduction in any of those quarters, you're automatically eligible for this employee retention tax credit. That said, there's also the opportunity to qualify based on governmental orders that negatively impacted your business. So if you were fully or partially shut down and you were not able to operate as usual, you would very much be eligible for this. So that's why Lauren thought it would be really good to talk to all of you, because most all of you have been impacted negatively in your revenue stream by the governmental shutdown orders. So next, what's the size of the company? So in 2020, if you're 100 employees or less, you qualify for this eligibility. In 2021, it's 500 employees or less. So probably most of you are under those numbers, but if you were over those thresholds, then you would be looking at a different type of program. So with that, I'm going to hand it back over to Lauren, who's going to talk a little bit about the context of PPP and ERTC.
Great, thank you, Fran. So the original CARES Act if you received a PPP loan, you were not eligible to claim the employee retention tax credits. It was either one or the other. Now, with this new legislation, with the stimulus bill, if you received a PPP loan, and even if you are applying for a second PPP loan, you still can qualify for the employee retention tax credits. What we do is we perform a calculation of what wages were used for the PPP and what wages remain. And if those wages, if there are still qualifying wages, you can still apply for the credit. And so what that means is, I'll give you just a quick example. Most organizations received PPP funding in April or May of 2020. And you were given the 8 weeks or 24 weeks of forgiveness. And so even if you claim 24 weeks of forgiveness, most of that forgiveness was finished through the beginning of October. So that meant that still all of your Q4 of 2020 wages would be eligible for the credit. And even if you used up all of your PPP funds sooner than that, it opens up even more wages that are eligible. So it's not hard to have qualifying wages, even if you received a PPP loan. And what we're also doing are organizations that have applied for the second PPP, what we're helping them do is maximize both the employee retention tax credit and the PPP funds, so you can maximize the credit as well as those funds, and we'll help you calculate all that and figure all that out. So that's part of our service as well. And so there's these credit advances you can receive if you, so what you would do is, if you, most everybody has already submitted their Q4 of 2020 941 form, which is your payment of all of your tax obligations, employer tax obligations. So what this did is, if you end up with a credit, you can actually receive an advance payment back when you amend your Q4 941. You can actually request to either have cash back or to roll that credit forward into 2021, which would mean that you would not have to pay those payroll taxes because you would have a credit sitting there. So it allows you to just bring cash into your organization. And so that's what is proving so helpful to so many organizations that have struggled during this pandemic. So here's an example, a calculation example. So these, so you have an employee that earned $12,000 in quarterly wages. For the 2020 CARES Act, the maximum qualifying wage amount is $10,000 with a 50% eligible credit. So that means $5,000 per employee in eligible retention credit. And so you add those up, less all the taxes that you paid, and you can get a refund if the credit exceeds that amount for the quarter. And since those have been remitted typically for the fourth quarter, you are eligible to request a refund. And now with the new stimulus bill for 2021, for those first 2 quarters, same example, $12,000 in quarterly wages. You're again, the maximum qualifying amount is $10,000, and you get 70% of that for Q1, as well as 70% of that for Q2. So that's up to $7,000 per employee for each one of those quarters. So that's a potential of $14,000 times the number of eligible employees for Q1 and Q2 of 2021. So again, as I said, it's monetized by taking a credit on your payroll tax return, which reduces your future tax deposits, or you can request a direct refund. I'll turn it back to Fran.
So how do you claim this employee retention tax credit? There are a couple steps to it. As Lauren indicated, we have to make sure we use the qualifying wages. So a rule of thumb is you can't double dip. So if you've claimed some wages for your forgiveness on your PPP forgiveness application, we can't use those same wages to calculate an employee retention tax credit. But first steps are we need to do the calculations to see how much you would be eligible for in your payroll tax credit. And then what we do is we file an amended 941. So Lauren talked about your quarterly payroll tax form that you file at the end of the year. You've likely filed your fourth quarter of 2020 already. And so what we'll need to do is we file an amendment, and then we also file a Form 7200. And depending on your payroll tax credit, we're really advising our clients, if you're operating and you're running payroll, to go ahead and claim that credit right away, because that then allows you to not have to pay federal payroll taxes as you process payroll. So it depends a lot on who is processing your payroll, how you claim that. Some of the payroll companies, you can pick up the phone. I think ADP, you can just pick up the phone and say, hey, I've calculated and filed my amended 941X, and I want to claim my payroll credit. So that allows you to do that with your payroll company. It really depends on your payroll company. And if you're doing payroll yourself, then we can help you think through that. So how do we tackle this? First steps, we should look at your gross receipts by quarter and see, did you have a reduction of 50% in 2020 quarter versus 2019 quarter? Or for you all, it's more than likely that your school or your business was partially or fully suspended by governmental orders, in which case we know that you're eligible for this employee retention tax credit. Then next, what we do, oh, sorry, my mouse got a little fast there. This is a sample of how the calculation looks. So important thing to note, you'll see up here in this corner, it says method cash. So what you all should do is take a look at your tax return and understand how you file your taxes, because that's the definition of gross receipts in this act. So if you file your taxes on a cash basis, we need to calculate your gross receipts on a cash basis. If you file them on an accrual basis, then we need to calculate gross receipts on an accrual basis. And if you look at your last tax return, whenever that was, you can see, I think it's on page 2, it'll say it says tax basis, it'll say cash or accrual. It's really easy to look up. And then what we do is, really simply, we put in your gross receipts by quarter. And if you have a 50% reduction in any quarter, you're eligible for that employee retention tax credit. So you can see right here in second quarter of 2020, there was a 53% reduction. So you are eligible. The other thing to know, which we're helping our clients plan, is that in 2021 and 2020, Q1 of 2021, we're also comparing your gross receipts against Q1 of 2019 to see if you qualify for the 2021 tax credits. So if you see down here, this bar in green allows you to say, okay, well, if I had 3 million in revenues in Q1, I would be eligible for the employee retention tax credit if I had revenues of 2.466 or less. So we're also helping you plan to be able to determine if you can also qualify for this year's Q1 and Q2 tax credits. And sometimes there's some opportunities to work with your customers to manage that number so that you can be eligible for that tax credit. So, I'm going to say, what are our key takeaways here? Let's look at the revenue, the gross receipts, that exercise we just went through. Secondly, really identify, did you guys have to close or reduce the number of students or people that you're serving in your business? that's another way that we can look and see if you're eligible. And then what we do is we're going to look at your detailed payroll analysis. And there's a combination of things going on in that analysis. Firstly, we need to look at your PPP forgiveness and what you've already used as wages for that, and then see what's eligible for the employee tax credit. And what the good news is, if you haven't filed for your forgiveness, they've expanded some of the expenses that are allowable forgivable expenses. So we can really help you think through what is the maximum forgiveness I can get on my PPP loan, on PPP loan 1 and PPP loan 2, and also maximize your employee retention tax credit. So we can run some scenarios to ensure that you get the most out of these programs that the government has put together to really help you weather the storm. And then once we've gotten through that analysis and determined what are your eligible wages that you can apply for your credit, then we'll file the amended returns and also work either with you directly, your payroll company, or whomever is the appropriate party to claim your payroll tax credit and or have a check come back to you. And again, we are really encouraging our clients to claim the credit because it's an immediate impact on your cash flow versus, filing and waiting for the IRS to process your amendments and send you a check back. Cash in hand is always more beneficial in these particular environments. I mean, probably some of you are also filing for your PPP loan 2. Or maybe even gotten your PPP loan 2. If so, congratulations, that's pretty quick. And we can help you to really think through how you can maximize your forgiveness on PPP loan 2 and also get this tax credit. So we really want to help you to, to figure this out. We're really committed to helping all these small businesses who are really having a time of it right now. And so with that, I'm going to check in with Jeff. Do we have any questions?
We do. And before we get to the questions, I think, the real key takeaway is that this stuff is hard and confusing. And so you really want to thank PBO, Fran, Lauren, again on being with us to explain all this. For me, the key takeaway is really, if you need help with any of this, PBO is a fantastic resource. Fran and Lauren have their contact information here. Again, we'll be sending out an email after the webinar so that you can know where to go to contact PBO should you need any help, because most of you will potentially qualify or be eligible for some sort of credit. And, I think it's great that PBO, somebody like PBO, is here to help you realize that, because I'm sure a lot of these are going unclaimed. So let's see if we have some questions here. We do. So it looks like the first question is, did the new bill change the CARES Act rule that wages used towards the ERTC cannot be deducted for tax purposes? And this person said, I can't find anything about that this rule was changed, but I would hate to be wrong.
Great question. So, and it's been really confusing for people, so don't feel bad. So in that new bill, what they also did was say that any of the forgivable expenses on the PPP loan 2 and the wages claimed for ERTC credits could also be expenses that are deductible on your tax return. Because originally in the CARES Act, it was not so. So there was a lot of confusion in the marketplace on whether or not we could even claim any of the payroll that was part of our PPP loan as business expense. But they changed that at the end of the year last year, thankfully. And the other thing to note that's important is your PPP loan, once it's forgiven, right now it sits on your balance sheet as a loan. As soon as you get the SBA letter that says your loan was forgiven, then you're going to reduce your loan amount and you're going to book that as other income. That other income is non-taxable. So when you're working with your tax folks to file your 2020, you should definitely make sure they understand that you have a PPP loan. Let them know if it was forgiven or not, because it is income, but it's not taxable income. And those expenses that you use to be forgiven are deductible expenses. So it's a really big win for all of you. Good question. It's very confusing.
Yeah, I think we have another question that's somewhat related to that, Fran. This person asks, what if I've filed for PPP already? Can I amend the forgiveness application with the bank?
It is my experience that you can call the bank like immediately, as soon as we get done here, and see if they have not submitted it to the SBA. If they've submitted it to the SBA, your opportunity to amend is gone. But if the bank hasn't submitted to the SBA and they're still reviewing, you could very potentially have your banker, cancel that application and have you refile.
And it still bodes, some analysis to see, because even if you have filed and you have been given forgiveness, or if you're awaiting for SBA notification of forgiveness and it's already been sent through by your bank, it doesn't mean that you aren't eligible for credits. It means we just need to take a look and see, even if folks claimed the whole 24 weeks, but actually only needed wages for 8, 10, 12 weeks, there's still eligible wages in there that need to be considered. So please let us take a look.
Great feedback. A couple more questions here. This person is asking if the 2020 941 form was already filed. How do you apply for the ERTC? Is there another form that will retroactively be filed?
Yes, it's the 941X, which is an amended 941.
To amend that quarterly return.
Yes, you can amend that quarterly return, and there's actually in the new 941 forms, there's actually a line that allows you to enter in that credit. And so what that will do will create this credit for you after you have already paid those taxes. And then again, you get to choose whether you want to ask for a refund or roll that credit forward into 2021, which is what Fran and I are suggesting you do, because you get immediate benefit by not having to pay additional taxes in your first quarter.
Great. And then one last question. What about the taxes paid for 2020? If you've already filed and paid your taxes, it looks like they're asking, how do we collect the credit for last year? Does that come in the form of cash back from the government?
So it's the same type of thing. It's what you do is you file that 941X, which is the 941 amendment, and you show that you have that eligible credit. And then again, you can either ask for a refund of those that amount that was overpaid, with the credit included for 2020, or as we said, roll that forward into 2021 and just reduce the amount that you need to pay for both Q1 and possibly for Q2 as well, depending on the amount of the credit.
Got it. Great. Well, it looks like that covers all of the questions. Before I close us out here, Fran and Lauren, did you have anything else that you wanted to share?
Yes, so we're really committed to helping people think through this. It can be complicated if you don't deal with these things on a regular basis. And so what we're doing is
Oops, looks like Fran may maybe be having a few technical difficulties. Fran, are you still there? Looks like we may have lost Fran right at the end.
things we have partnered with Think LL.
Oh, maybe I should speak. Should I go ahead?
Yes, Lauren, I think you might want to take over there. Hand it off.
Sorry about that. We can help. We've partnered with Think LLP, which specializes specifically in R&D tax credits. For the organizations that qualify with the 50% reduction in gross receipts and or are very obviously impacted by the government mandates, PBO can also do this work internally. So we're working with this organization as well, but it's all on a contingency fee. So you don't pay anything until we have calculated a credit for you and filed for that, whether it's a refund or a credit to future payroll taxes. Is that what you wanted to say, Fran? Yay.
Well, that's great. I think I know from the standpoint of our childcare provider audience, that's very helpful to know because again, this is all, it's all confusing and people need assistance and support with this. So I think, again, at the end of the day, if you do need support and assistance with this, give PBO a call, shoot them an email. We will, again, be providing you with all the instructions on how to do that. Fran and Lauren, I want to thank you again so much for being here. It's been incredibly informative and very helpful to explain all of this to everybody. And to all of our childcare providers, thank you as well for joining us. We will be creating content like this for you that will help and support you, in the future. So keep checking back on more informative webinars. Don't forget to log into TOOTRiS and keep your profiles updated. And thank you all again, and we'll talk to you all soon.
Nice.
Take
Thank
care.
you, everyone.
Take care. Give us a call if you need us.
Bye.
Bye.